Thanks again for spending some time with us today. If you found value in anything you heard, please share with someone who may benefit. We look forward to connecting between shows in our Facebook group, First Responder Financial Freedom. Till next time.
All right, everybody, we are here for a pretty big episode. This is our 52nd episode on First Responder Financial Freedom. Mr. Ethan Board out of Kentucky is going to be our guest. Big deal for me, Mike, and Aaron. As we originally set out to do this podcast, we said that we were going to do no less than 52. So we have crossed the threshold. Ethan, why don't you give us a quick background as far as what you do for a living as far as a fireman goes, when that started, how long you've been doing that, and then give us a brief intro into your investing journey as well.
All right. So I started firefighting in 2013 here in the Western Kentucky, here in Owensboro. I've been doing it since then. Before that, I volunteered a little bit. And then I started investing in 2019, and I started it with house hacking, and we'll go into that, I'm sure, in a little bit. But just a quick background on that. Just been doing it since 2019, so not really that long. And to me, it's a way to get started in investing, and we'll go into that a little bit more too.
So 2013, did you have any family on the job? What made you want to be a fireman? What got you going in that respect?
In 2013, it took me a long time to get on the fire department. I was trying to get on out. I graduated in high school in 2008. At first, I was trying to be a nurse. Didn't really know what I wanted to do, but I then was like, what can I do? So I went to my community college, got my fire science degree, and then from there on, I got on the fire department. Just wanted to help people, and somehow I thought this was a great way to do it. I can basically get paid to work out, help out other people along the way. I was like, this is like a win-win for me. So that's what got me into, firefighting, is just helping people, serving others, and being a part of the community that I grew up in. So
you want some goals for the tools and then say the beast?
Yeah, exactly. Yeah. Say the beast.
Nice. And then, so you said, as far as your real estate investing journey goes, you started in 2019, and that was a house hack, correct?
Correct. Yeah, we bought a duplex in 2019 in April.
Oh, okay. So can you kind of start? We'll start there. Can you explain what a house hack is?
Yeah, sure. So house hacking, for anybody that doesn't know, is just a way to rent out part of your home. It could be, if you have a single family home, it could be, renting out a room. It could even be renting out a bed or a couch, an extra couch that you might have, just to supplement your mortgage payment. And for me, and my family at the time, we lived in a, like a 1,700 square foot home. We just had a baby, and we just couldn't get away from like the whole grind. Like we could pay our mortgage fine, but we tried to, we were like, if we do this for the next 30 years, we're going to be doing the same thing. What can we do to get out of this rut, get out of this rat race, basically?
A treadmill, man.
Oh yeah. So we were like, and she's a nurse, I'm a firefighter. We have these great jobs, but we got into the American dream, like you got to buy a house, you got to have this, have that. And so we then were like, we're going to sell everything, start over, and buy a duplex and house hack. So that's what we did.
One of the things I wish I could go back and teach my younger self. And what's crazy is, so whenever I bought my first home, I had, I think I actually bought it the year before I got on the job. So I was looking at duplexes and triplexes because I wasn't calling it house hacking, but I kind of got the concept. I was like, I'll do that. But then I ended up just buying like this. I've talked about it, this live and flip that had cat hair in the refrigerator, and it was just disgusting, right? So I went with a different strategy instead of the house hack. I did the live and flip. Didn't call it that back then, but kind of the same result. But yeah, man, don't you wish you could just go back, and we talked about this at the last episode, like your 40-year-old self, go and have a conversation with your 20-year-old self, even though your 20-year-old self probably would just be like, yeah, that guy doesn't know what he's talking about, man.
Yeah.
So So how did you find this property? Was it MLS or off market or?
Yep. So at the time, we were looking and we were just basically just watching the market, and it came on the MLS. We already had our house for sale; it wasn't really selling, so we ended up buying the duplex pretty much as soon as it came on the market. It ended up being some investor that was basically liquidating all the stuff, which was great. He had it for a long time; it was paid off. I'm assuming because he had it for so long, and we got it and just moved. We fixed it up a little bit before we moved in, and then we sold our house, obviously moved in, and then stayed there for a year. And ever since 2019, we haven't paid out of pocket for a mortgage. So I think this is a huge deal for people who are, like I said, trying to get into real estate investing and doesn't have a lot of money, don't have a lot of networking yet because they're so new. House hacking for me was a way to get rid of my biggest expense, which is more than likely everyone's biggest expense is their mortgage or their rent.
Yeah, I forget what it is, and I'm sure Tyler might know. But for instance, whenever I look at a rental application, their monthly income needs to be 2.5 to 3 times the rent rate. So I'm not good at math. So if the rent is $1,000, their household income needs to be at least $3,000 a month. Some people would say 2,500, but I find 3,000 is better because you end up going a little bit lower. Next thing you know, like they have one car repair, or God forbid they have to replace their iPhone 17. Like they're not gonna have money to pay their rent. So I don't know, Tyler, is there an average? Like what is the typical American household's income as a percent of their mortgage? That was very
So
poorly worded, but you get the idea.
yeah, no worries. Yeah. So what you try to do, and when we're qualifying people and what the lenders want to see is no more than certain percentages on what's called your front end ratio and then your back end ratio. So your front end ratio
Tell me
is
more about this back end ratio.
um, so the front end ratio is just your house payment. That's all they're going to include. And you, as a rule of thumb, it increases and decreases, but I always like to use 36% of your income, right? And that's gross. So that's before any taxes, anything like that are taken out. On the back end, depending on what type of loan product you can go anywhere from 43% for like a conventional loan. 43 to 45 is probably the most common where you're going to still get approved. And then for like a VA or an FHA loan, you can go sometimes up to like 60, 63%. Now,
So
what
just
you
to be
can
clear,
do,
63% of your income could go towards your housing.
correct, and that's the highest I've ever really seen. And so
Holy
I was
crap.
I was gonna clarify something. Just because you can qualify for something does absolutely not mean that you should. So for me, I stick to the 36-43 because I think it's good advice. And if I was doing it, then I would not want to go above that number anyways. So the biggest thing that people are qualifying for is don't go above what you're comfortable with. Everybody's that when they call me, how much can I qualify for? Well, you can probably qualify for a lot more than what you're comfortable with as a monthly payment. So what I do is I'll set a ceiling. Hey, the max, like I'll use Orange County where I live, for example. The max you can qualify for is 700,000. But let me ask you this, Mike. What would you be comfortable paying on a monthly basis? And they'll usually know that. Most people will usually know, hey, I'm comfortable $2,500, $3,000 all in. Okay, well, let's back that out and see what that means in terms of a purchase price and then a mortgage payment and then go from there. But to answer your question, I personally think I wouldn't go over 43%. I'm very conservative. I just don't see the point in stressing myself out over a mortgage payment, kind of like Ethan was saying. Hey, especially if you can eliminate your number one expense, which is housing, life's good, man. I mean, I don't know about you guys, but I have never really pushed that envelope. And even with my current work status where I'm injured, I'm not stressing out on my mortgage payment, which has always been very intentional. So when people are looking, like I said, 36-43 is the rule I would use.
Yeah. So on the approval thing, so my wife worked at a hospital also before the whole COVID mandate. But anyways, that's another story. So like she had a decent job. I was on the job, and we built a home in 2011. So worked out in our favor because they were practically giving stuff away as you came out of the last dip. But I think originally they approved us for like $580,000 or something absurd. And I was like, there's no way. Like, I'm never going to spend that much. Like, obviously, I don't live in California. So, like, I think our house ended up being like 268,000 or something. So we literally almost went in half of what they approved us for, because I was like, yeah, we'll be able to live there, but we're not going to be able to do anything outside of pay our mortgage. So sorry,
Exactly.
Ethan, we've kind of railroaded this a little bit, but so you found it on the MLS. Can you kind of walk us through like what it looked like? You said your house wasn't selling. So did you have two houses at once? How did you finance it?
So at
Kind of what that
first,
looks like.
yeah. So the house that we had, it was basically we had it built. It was brand new, so it was only a couple years old. So just at the time, it just wasn't selling. But it sold pretty much immediately when we bought the duplex, and that allowed us to use the equity that we did have in it to put down for the duplex. The duplex we paid 105.2 for it, and we put 20% down. So we did a conventional loan, 20% down. I put about probably $5,000, $6,000 in the renovations into it, and then we moved in.
Perfect. Okay, so you said you put 20% down conventional loan, and it's a duplex, but since you live there, you were able to get owner-occupied financing, correct?
Yep, correct.
So your interest rate would be lower than it would if you had bought a duplex and you didn't live there.
Correct. Yeah.
Perfect. Okay, and then when you bought it, did you purchase it knowing what the expected rent would be on the A or B side?
Yeah, so I had to, inherit the tenants. I actually had to basically not kick out a tenant at first, but she was on a month-to-month lease, so I just basically stopped her lease. I gave her a 30-day notice. That gave me time to sell my house and then also figure out what I was going to do to renovate it whenever she did move out. So I already had the tenant she was probably in the middle of her lease, I think, at the time. So her rent was paying for my mortgage already. I knew that was going to happen. So I knew I was going to live for free. And so it took about a month to renovate everything. I just painted, cleaned, had old cabinets. So I sanded those down, painted those, put a new bathroom vanity, new toilet, new floor throughout, and then new windows. So I didn't do a whole lot of stuff, but I did pretty much everything myself other than windows.
I was just going to say, did you do it all yourself? So how did you finance those repairs?
It was just our liquid cash that we had. And I think I used some credit card too at the time.
Dude, I wouldn't necessarily advocate this strategy, but I've done it before, is a 0% interest credit card. I sat there and used the whole, like put $15,000 on it and then just diligently paid it off every month because it was 0%. Again, you need to know yourself as a person. If you're going to go crazy and bet it all on the ponies and not use it for smart stuff, I wouldn't advocate that. But like, if you're disciplined with it, I think credit cards can be a useful tool. And to kind of build upon that, we did an episode with Jamie McMahon where he talked about basically using credit cards to basically take your everyday spend and, use it to your benefit. So I just went to the Bahamas for a week, and I was able to pay for the entire hotel room for 7 days with credit card points by basically doing stuff what you just talked about, like the windows and all that stuff. Like, I pay all my property taxes with a credit card because I basically get 2 free airline tickets out of it. And, it's stuff you're going to pay for anyways. So,
yeah,
anyways, I was just curious how you fund it.
Yeah, no.
Yeah. I mean, I've kind of always like been pretty good with that kind of stuff. Like, I pay them off every month. Like, I don't carry a balance. So, but again, some of these things you're going to have to do or are going to do, like in a rehab project. I know Tyler has talked about it, like with his Amex card. Like, you can sit there and you can rack up some pretty serious credit card bills when you're flipping houses. So, yeah. I mean, it was it was last year, we were the third biggest client at our Lowe's. So like, I mean, we were always getting stuff, but that also meant we were getting some pretty serious bills every month there. So, but anyways, you can use that normal spend to your benefit. So anyways, so you did all the work yourself. Were you living in it while you did the work?
So before we moved in all the way, I basically renovated it and then moved in. So, like I said, we, cleaned, painted the walls, new flooring basically, and then a new bathroom other than the tub and shower area. I did all that myself, had to scrape the floors, had to, take a torch to get the glue off, and it was just concrete. And then I just laid vinyl plank. And then people are like, how did you learn how to do this? And I'm just like, YouTube, man, YouTube,
Dude.
YouTube. And,
Yeah.
you know, it worked out. It works and it's good. So, and it's great for a rental, man.
So I told you we did a live and flip. And so I did a lot of the stuff you talked about, with the exception of I didn't do the kitchen and bathroom all myself. So I hired that out. But I made the mistake of doing both at the same time. And so they was down to the studs. And we're talking like this is an old house, like from the 30s. So it was not just drywall, like there's lath and plaster, and it was just a mess. And my wife was just in tears because for basically a month we would have to go to the gym that we belonged to basically shower. And like unless you could cook it with a microwave, like we weren't having it for dinner. So I would highly recommend, pro tip, don't do the kitchen and the bathroom if it's your only bathroom in the house all at the same time. So
Yeah, sure.
so was the other side occupied whenever you bought the home? Was it vacant? What did that look like?
So it was occupied at the time. It still is. I mean, I've knock on wood, I've had great tenants over here in my duplex.
Same tenants since you bought it?
The tenant, there were two girls on one side, and then whenever I moved out, one of them moved over to the other side. They wanted to live by themselves. So I already had there were two girls on the left side. I lived on the right. And whenever I moved out, she just moved over to the right. And then they just, so I already knew their background, already knew their job history and everything. So I didn't really even have to promote it and try to get a new tenant. I just moved them over and got a lease, and and then I rented. The rent went up on the side that I renovated because obviously I renovated it. It's newer stuff, so rent went up for that, and so now I'm just cash flowing like crazy now. Like I did the numbers, and my mortgage on it's $685, and the rent right now is $1,325 total. So I mean, I'm cash flowing pretty
Not
good.
per side total, correct?
Yeah, this is right now on both sides. When I was living there, the mortgage was $685, and the rent was like $700, I think it was. So I mean, it was
Okay.
when I first.
That's
moved.
a pretty reasonable rent. I don't obviously know your market, but around here, I mean, you can't get anything for that inexpensive. So that's awesome. So
they're both 2-bed, 1-bath. I could easily probably rent it for more, but I look at it. I value my tenants because I'm very I'm the type of landlord that I'm involved with my tenants. So I value a personal relationship with them. It might bite me in the ass later on, but I think that me being more personal with them, I'm not really looking to get rich right now. My plan is to basically hold these long term. And as long as they're paying for themselves, I can provide a cheaper place for these people to live in, and then they can save up a nest egg and they can move out into a home and or upgrade their lifestyle based on my lower rent. It's lower than market rent for sure, but I value that because I value my tenants, and it's going to help me as long as it's paying for itself. It's appreciating and depreciating and all this. So I don't see why I need to raise rent until I renovate it or anything right now. So.
sure. So, well, I mean, there's a dichotomy there. So I will caution you that don't get too far behind the 8 ball. Like at the end of the day, you're not running a charity. And I 100% agree that there is value in quality residence. And if they're taking care of the home, they're paying on time. Like I'm not saying price gouge them, but I would encourage you to my philosophy is to kind of stay close to market. With that being said, my quality residents that take care of the home, communicate, pay their rent on time, they know that they're paying below market, and that's fine. But I don't want to get the disparity too large to where rents should be 900 and they're paying 5, right? Because your property taxes are going to go up when you do have to do repairs. Like just because they've been good tenants doesn't mean inflation hasn't affected the cost of the labor and the material that you're going to have to fix these places with. So staying somewhat on pace with it is worthwhile.
Yeah, for sure.
So you had this for a year, correct? Before you moved out, or did you live there for longer than a year?
No, I lived there pretty much. It might have been 13 months, but it was right at a year. And then we bought a single family home. So so each side of my duplex is about 750 square foot. It's a 2-bed, 1-bath. And I had my wife and 2 kids with me at the time too. So a year later, we bought a single family home, put the renter inside the other side that we moved out of on the duplex. And now the duplex is basically paying for itself and my single family home that we moved into a year later.
Perfect. Okay, so then for that portion though, for the year you did it, I'm guessing because you know that you have an occupancy requirement whenever you purchase a home, like you stated earlier, you have conventional financing, owner occupied financing. On your deed restriction, it usually says somewhere in the paperwork that you agree to live there for a year as a primary residence, and then you moved out. So
Yes.
then, as we go into this, is that the house that you're currently living in?
No.
Perfect. Okay, that's good. So, how did you finance that the second house that we're
So the
talking, or
second house,
the single family residence?
yeah. So the single family house that we moved into a year after the duplex, we bought it in January of 2020.
Okay.
And we financed it conventional financing, 20% down. So remember when I first started, I had a mortgage of like $1,200-$1,300 on our brand new home. And then we sold it and moved into the duplex. We got to save that $1,200 a month for 12 months. That was our down payment for our single family home that we moved into a year after the duplex.
Awesome. And like we did a little bit earlier, I'm going to kind of hijack this. Why are you choosing to put 20% down on both of the properties?
Just for conventional financing, and then to get out of PMI.
Okay.
I'm sure people know what PMI is, property mortgage insurance. So that's why we're doing that.
But what is PMI? Can we just break that down? Because I don't think we've ever really covered it much. But Tyler, what is that ripoff fee?
So it's so I'm going to play devil's advocate right now.
I'm just
no, I know, but
when I got my first mortgage, I was like, "What is this bullshit?" You know,
dude.
But you can break it down the why behind it.
So it's just private mortgage insurance, and basically what it is somebody's going to insure against your loan. I'm sorry, for anything that's less than 20% down. And what they're doing is they're using this as a hedge for risk, right? The thought behind it is if you put 20% down, you default, something happens, the lender's going to have enough of a cushion to take the house back through foreclosure, deed in lieu of foreclosure, and then have the ability to sell and still get their money back. So private and mortgage insurance, like any other type of insurance, is hedging against that risk. Now, the reason I asked you is if you have the 20% and you're comfortable doing it, awesome, then you don't have it. What I will say is now with a lot of other things, because of all these efficiencies created, mortgage insurance is super cheap. So I will say that let's say you bought this house and it needed a ton of work and you were still able to afford 3 to 5% down as far as the monthly mortgage payment goes, and use that additional cash to fix the property up. I would say at this point, it's cheap enough to where I personally would do it. And there's two reasons. At a property at that purchase price, your mortgage insurance may be $20 to $30 a month. So if I could take that $20 to $30 a month, and I'm okay with that, but I have the cash now available to finance it, or not, I'm sorry, to not have to finance the rehab costs, why would I not do it? And we'll go back to what we were just talking about. If I don't have to put it on a credit card, if I don't have to do anything else, then now I can use cash to use that for the rehab funds. And with a conventional loan like you were doing, the mortgage insurance is going to fall off a couple different ways. After so many years, if you get 78% of the original loan amount, not the purchase price, but the actual loan amount, that will fall off too. Or if you refinance, you're able to take that off as well. So just awesome that you did 20%. I'm assuming based off of what we're talking about right now, you were able to pay cash for those funds too, whatever you did to fix up the property. But if you can't do both, I would really suggest that people look at private mortgage insurance, see what the additional cost is, and if that makes sense in your daily budget. Like I said, 10 years ago, 15 years ago, dude, mortgage insurance was super expensive, and I get it. It was terrible. It was not a great product. Now, I would advocate, hey, unless you really just don't want to do a different strategy, or if you don't need to do it, look at it instead of just poo-pooing it right away and say, how much does this cost me a month? How much cash can I save? And can that cash be deployed into my property to increase the value, which increases my equity, which will allow me to refinance and get that money out? There's my soapbox for the day.
No, that's good. So does the lender hold the policy, or like, is it sold on the secondary market?
And so
Like
there's
the
there's
PMI policy.
So usually, so it depends. Some larger, like really large mortgage companies will offer their own product, but like a big insurer that I'm thinking of is MGIC and Radian. Those are probably the two biggest mortgage insurers in the country. And so, yeah, it is private. It's outside. It's collected through your payment every single month. But like I said, it's one of those things where, like, when I first started 20 years ago, and I'm sure way before that, it was super expensive because they could get away with it. Now that's a way for lenders to stand out and get more competitive. So Ethan, I love how you're doing 20% down. I think it's smart. It's based off of what you're saying, you can afford it. It makes sense. All these things. I would just say for people like you mentioned earlier, who are like bootstrapping this, and they're like, hey, I only have $10,000 to put down. I can afford, like, on $100,000 house, to put $3,000 down to make my 3% requirement. But the other $7,000 I can use to fix the house up. Don't dismiss it because your parents or your aunt or your uncle or your grandma said, oh, don't get mortgage insurance. It's a lot different than it used to be back then. And believe me, I used to have to do $700-800 in California. People would pay $700-800 a month in mortgage insurance alone. That is not a good investment. I understand that argument. But if you're telling me $30 a month is not a good investment to take a ton of cash and deploy it into your own property, I would say I'm not sure about that anymore. So that's cool. So the second one, 20% down. Did you have to fix that one up too?
Yes. So on that one, we did a little bit more. So we again painted, carpet in the bedrooms. We did a complete bathroom remodel. It was just very old. It was like a 1970 house. It was all original. It was a one owner. This lady lived in there. So everything was just totally old and outdated. So we did a complete bathroom remodel. And in the kitchen, we did new cabinets and new appliances. But new appliances are used appliances, in my opinion. And so we threw those used appliances off, Facebook Marketplace in there. And then we did floor throughout. And that was pretty much it. So I did most of the repairs again, other than the bathroom. I had to get a plumber in. They pulled the tub out and the drain was rusted through. So that was out of my hands. I needed a plumber at that point. So I had the plumber come in there, fix the drain, and put the bathtub in. And then I did the vanity, the toilet, and the floors in the bathroom. And then the cabinets, I had a firefighter. We all have side gigs and side jobs on the fire department. This guy worked for a custom cabinet company, and he literally hangs cabinets on his days off. And so I called him, and me and him knocked out the cabinets in the kitchen. I got those. They were all just white, the plain white cabinets, and I got the pools off Amazon. And then threw the used appliances in there, and we were good to go. Painted, cleaned, and did the floor myself. Had a carpet guy come in that does carpet, and I put carpet in the bedrooms. We were again living in this house for a year. Normally, I wouldn't put carpet in a rental based on most of your renters are going to tear it up, get it dirty, and you're going to have to pull it up and replace it anyway. But since we were living there, we liked the carpet, so we had carpet put in the bedrooms only. Put vinyl plank throughout the rest of the house. It's more waterproof, more rent proof is what I call it. And then moved in, lived in there for a year. Same thing.
Nice. And I like the you said in quotation marks, the new appliances. For us, like, I've had good luck with my flips. Like, there's stores called Restore or things like that, Facebook Marketplace, and they may have a tiny little dent on them, a small scratch. But the reality is, especially with kids and stuff like that, you're going to have those anyways. And most people really don't notice them, especially when you know in your head, hey, this is going to be a rental at some point. It doesn't have to be pristine. We've got some killer appliances that were barely used for great deals. So I think that's a good hack, especially for people that they maybe have something in mind, but it's just out of their price range. I would look, you can go floor models at Lowe's or Home Depot. You can go to the Restore, Facebook Marketplace. I think it's huge. And like, you brought up a good point with the carpet. You know you're going to live in it. So you like the carpet. At the end of the day, when it's a rental, is that the best? No. But since you're living there, hey, might as well do it. And the easy part is, I don't know if you bought it at that point, but you can always buy extra material when you're buying your other flooring. And then you have that. So should the carpet get done and you don't have to go color match now 2 different types of floors, boom, we already have it and we're ready to roll. Like in my current house right now that I'm living in, I have a bunch of extra product that we bought, that's up in my attic. If I need anything, it's the same color, it's the same lot. It's not going to look funky when we drop it down, and it's there. And I've learned that from a lot of the flips is buy a little bit more. You never know when you're going to need it. And if there's anything called out in an inspection, since we use the same floors pretty much everywhere, we have extra product lying around.
Yeah. So on those two things, so the carpet. So yes, I'm not a big fan of carpet in rentals anymore, but to your point, like if you're going to do it, the one thing I've learned is do it just the bedrooms. Like, so don't have it go through the hallway to this bedroom, to that bedroom, just do the bedrooms. And what I have done a couple times is get it basically measured for the size of the bedroom. So like 12 by 14, and don't even tack it down. You can get it bound is what they call it. So you basically just lay it in there like an area rug, but it fits the entire the dimension of the room. So that sometimes you don't even put padding under it. You just put the carpet down. So, and then the other thing is like, I've gone through the appliance gauntlet, I guess you could say. I used to buy only used, and then I quit doing that. Like the Facebook marketplace, come pick it up. Cause by the time you picked it up, inevitably it was going to need cleaned thoroughly. I've kind of found like, you know what, I'm just going to buy new appliances for these things. And like I said, at Lowe's, we were one of the more consistent customers. So I had my own rep that I could just call and be like, yo, this is what I need. Here's the address. And I would just say white, black, stainless, doesn't matter. Different price points. I used to only do white. I used to only do black because I was like, oh, if I do white, it's easy to magic eraser it. Oh, if I do black, it doesn't show all the fingerprints. And then I pretty much just started putting stainless in all the rentals because the price difference was like $100 or $200. But everybody comes in and they're like, oh, stainless appliances, and you stick out from the average landlord. So like some of my rentals, I've put granite in, the white shaker cabinets, the stainless appliances. And, when I first started, I was whatever I could buy that was cheap, a little bit of Ollie's, a little bit from the Restore, a little bit from here. And it kind of looked like a mix and match. But as I kind of went down that road, I was like, you know what, this gives me a consistent theme and look. I know it's good. But I ran into an issue with buying appliances from Lowe's, and I would buy the floor models. And like what Tyler said, oh, it's got a dent on the side, or this is a Samsung refrigerator with a GE stove. Nobody cares when they're renting. But I couldn't get service on any of these things. So I just ran into my first issue where I bought a refrigerator, was 4 months old and completely died. It couldn't be serviced. So Lowe's replaced it for free, but it took a month. So now I got this tenant without a refrigerator for a month. So I got to figure that out. So what I did is I established a relationship with a local appliance company, and I just started buying all my appliances there because they would service anything they sold. And frankly, their pricing, they have to be competitive with the big box stores. So they have like 3 or 4 locations. I call them, they deliver it, they service it. It's just made my life easier. So I just figured I'd throw that in there about the appliances because I've definitely gone down the rabbit hole of like thinking I'm saving money, but it actually cost me more money in the long run. Not that you can't get lucky every now and then with it.
Yeah, there's definitely been a refrigerator that I bought that I do not like, but it's still kicking, but I probably should have just bought new. But it is what it is. It's a risk you got to take. Sometimes, I mean, you got to take risk in this real estate game. So, I can risk that knowing that, worst case scenario, I got to go buy a new one. So
nice. And so that was your third house. And now that's 3 doors. You have a duplex, that primary, and then you lived there for a year, and then you bought the house. I'm guessing that's your current residence right now.
Well, nope, not yet.
That's another one. Okay.
So, after I bought the single family home, me and my wife were like, hey, we're doing great. If we rented this house out, we could get like our dream home. We were back on the American dream. We were like, all right, let's do it. So we bought a house for $240,000 in 2021, in February 2021. And we lived in it for a little over a year because after that year happened, we were just like, man, it's on the wrong side of town. Our grandparents with the kids and stuff, our grandparents were on the other side of town. Like the location wasn't great for us. So after that year, we were planning on staying there. And then, and we knew that based on our rent, based on our mortgages, we were only going to pay like $250 maybe. out of our own pocket to live here. So, I mean, it was the biggest house I've ever lived in. It's the nicest house I've ever lived in, but we gotta, like I said, we got it in that American dream thing and kind of got above our means and things like that. And so we were like, let's, refocus and move back to the other side of town where our family is. And so about 13, 14 months later, we sold that house and made a $60,000 profit off of it. So we bought it for 240, sold it roughly about a year later for 300, right at 300. And we took that equity and we bought a house off market on our side of town that needed a little bit of cleaning and painting, and that was it. And so we put all that equity back into the house that I'm currently sitting in right now.
Awesome. So you've been able to do this. And then, so now the house that you're currently living in is obviously your primary. And how many active rental doors do you have?
4. So we have the duplex, that's 2, the single family home. And then we bought another 4th one in, April of 22. Yeah.
And that was not ever lived in. That was a pure investment property.
That was the first investment property I never lived in. Yes.
Cool. Okay. So, I mean, so we were talking about this before the show, me, you, and Mike, and I think this is a good point to kind of discuss it. So you've been able to house hack yourself to 4 doors. You've been able to use the proceeds for all of them in order to purchase the next or the additional properties. Now, for my big thing too, is if you do nothing else from this point forward, how many years do you have left until you retire?
Let's see. I got 10 on. So 15.
Okay, so if you did nothing else and you were able to pay these down, you would essentially, I'm guessing you would have a primary residence that's paid for, which is huge for any of us. Even though pensions are awesome, that's still a big plus. And then those other houses, I'm guessing as rents go up, you could accelerate your pay down. You would have a huge buffer for your pension, for your retirement, things like that. I'm assuming that's correct. Yeah.
Oh yeah, definitely. I don't bank on the retirement. Our retirement in Kentucky is it's very like unfunded. I think it was like 43% funded. So it's just like I don't even know if it's gonna I might make it to my retirement, but I don't know if it's gonna be there. If it's there, great, it's a plus. My retirement is my guaranteed real estate. To me, real estate is gonna be more guaranteed than the stock market. It's gonna be more guaranteed than even my pension that I'm supposed to have, But this is just a way that I can pretty much guarantee that I'm going to have this monthly rental income. Worst case scenario, I go to retirement and I have my rental income from my investing.
So is your goal to get to do you intend to retire from the fire department? I guess is my question.
Well, my whole thing is fire life, financially independent, retire early. So I do want to be able to retire early. Now, that might be in about 10 years. So I'm probably more than likely just going to stick it out 5 more just to get the pension, basically. So I do want to be able to be retired before I'm actually retired. Does that make sense? I want to be able to retire early.
No, and I've had this conversation a lot. And frankly, it's one of those questions that I've wrestled with a lot, especially because I have several buddies that were on the job that have since retired or quit, whatever you want to technically call it. And the frequent question I get asked is, why are you still doing this? Why haven't you left? Frankly, it's a question that, trust me, I've had this conversation with myself more times than I care to admit. And I basically came to the conclusion. So I am eligible, and I use the term eligible on purpose, to retire in just under 5 years. So at that point, I'll be in my mid 40s. And I don't want to be one of these guys that feels like they have to work 30 years to get every red cent. And then whenever I do retire, I got to go get a job driving a school bus or a dump truck or whatever it is. If you want to do that, that's fine. Like I have no problems with that. But like, I don't want to be the guy that has to be there for 30 years because I can't afford to retire. So I get you. Like, I want to get to the point where like, hey, I'm eligible. If I want to retire, I can. But I've made the decision in my mind, like I'm just going to make it to my retirement date, and then we'll decide. If I'm having fun and I'm healthy, cool. Because if you don't, like, I made the determination, like, if I don't draw that line in the sand, just commit that I'm going to make it to retirement. We all have good days, we all have bad days, and you'll have that friggin' tug of war in your head. Oh, it's a bad day, you want to quit. Oh, it's a good day, I'm going to stay. Like, so I just have kind of made the commitment to myself, like, hey, I'm going to see it through. I'm doing 20 years. I look at everything as a percent because I'm not good at fractions. So I'm like past the 75% mark on my career. Like, there's times where that 25% seems really far away. And frankly, I always think about, like, with my kids, like, I look at my 11-year-old and I get these photos on my phone and stuff that remind me of, like, hey, 5 years ago, 8 years ago, 10 years ago. And I'm like, that seems like the other day. So when I think about it in 4 or 5 years with, kids, oh, that's going to go by like that. So that was just my little tangent on that. Sorry.
Yeah, well, it's funny too because a lot of guys are like, "Oh, I'm one bad day away from retirement." That's what a lot of the dudes that I know say. It's like, I'm one bad day and I'm out of here. But then there's also some guys that don't have that option and they don't have that luxury because they're financing their lifestyle based off of overtime and being actively on duty. And the hard part is like, we always talk about this, and I think that's why we started the podcast, was once you get down to that road to where you're maybe 2 or 3 years out, Mike, or let's say your position, 4.5 years, is it still totally possible to create a lifestyle based off of what like Ethan's doing? Absolutely. Because you started, excuse me, in 2019, we're now in 2023, and you're in a much better spot financially. And we haven't even talked about, accrued equity, rent increases, all of these things. And it's a huge difference. And to your point about pensions not being totally funded, I would guess as time goes on, those will be more and more under attack. It'll less and less of a sure thing. Back in the 70s, 80s, 60s, rock solid, man. You're getting your pension, you're ready to roll. So I think it's very smart that you do it. And Mike, like you said, the job could just be really fun at that point in your career and be like, hey, I'm going to stick it out until I don't want to go on any more calls. Just one day you decide, hey, I've had enough, or to continue going. And that's a beautiful part of it. It's a luxury at that point. And you'll appreciate the job that much more, I'm assuming, as you're getting to that point, and you can decide what you want to do. So I think it's a pretty cool spot to be in. So Ethan, you have these 4 doors, you're living mortgage free. You obviously have 10. Oh, you're
every time I hear 4 doors, do you remember the case with Kyle Rittenhouse? He was like the guy that he shot somebody during one of those like riots. I'm not laughing at that.
Oh no, I know exactly what you're talking about.
His,
the younger
his,
kid. Yeah.
His handle on like whatever it was, like Instagram, was 4 doors more horrors. And so every time I hear 4 doors, that just makes me laugh. I'm sorry. I'm childish. I'll go back on mute.
No, you're fine. You're fine. So do you have like goals? Are you going to purchase another property here as a rental soon?
Yeah.
What do you see?
We're literally, we're still living rent free, or mortgage free. Technically, I did the math because I thought we were going to go like into numbers even more. I'm actually getting paid to live in my house right now. I'm with all my rentals, and everything, my mortgages, I'm positive $346 to live in my house that I'm in now. So I'm actually getting paid to live in my own house. I'm actually not living for free. I'm making money living in my own house.
In 3 years, or we'll start in your 4th year.
Yeah. So I had 4 doors in 3 years. That's where I've started since 2019. And since we are like, first responders, and for firefighters, I do want to say, like, this, when I first got on the fire department in 2013, people would always ask me, what do you do on your days off? What do you do? And it was like a guaranteed thing. Like, it was like you had to be mowing grass, you had to be doing concrete, you had to do something, or you just weren't a firefighter. You have to have a second job. And I was one of those people. I used to work for somebody mowing grass. I started my own mowing company because I was like, if I'm going to mow for this guy, I might as well mow for myself. But then we started having more kids. So we have 3 kids now, but at the time we had 2 kids. And I was like, I'm missing my kids growing up. So real estate, I want the firefighters to know, or first responders even, to know that like real estate, when my phone goes off for overtime, I don't even look at it anymore. I used to look at it. and be like, I got to be the first one to get it. I got to make sure, got to get this 24-hour shift so I can, pay my bills. I don't have to worry about that now. I have all my friends are like, oh, they want this overtime. I'm like, dude, if you just took your overtime for 1 year, bought a rental, you could be done with your overtime. Like that would allow you to just live more and do more with your own family and do more of what you want to do in life just by having one rental pay off your mortgage, your biggest expense. If you could just buy a duplex or buy a rental property, I mean, if you do the numbers right and get a good deal, like you're going to be set up. Try to figure out something that can get rid of your biggest expense, your mortgage or your rent, whatever you're doing. So that's just my big thing. I want firefighters, especially, to know, like, you don't have to work your overtime for freaking 20 years. Like I'm to the point, I'm basically 10 years on and I don't ever take any overtime anymore. I used to work every day that I'm off, but now I don't. I am a realtor now. I got my realtor license about a year ago. But so I did that because, I have a side job and it helps me with my real estate and finding deals, and it still brings a second income, and I can do it all with my family. I took my daughter on a showing 2 days ago, and that's what I want to do. I want to be able to do stuff with my family anytime I want. Being a realtor on the side, I can, the schedule's flexible. I can work or not. It doesn't even matter. So it's just a great thing.
You can build like a little niche working with like the first responder community, like Allie Anderson, who's been on and talked before. Like she was a former state trooper, and that's kind of like her wheelhouse, is working with that community because there's a level of inherent trust right out the gate. So is your intent to basically transition to a realtor one day, or is it just one of those like ancillary revenue streams?
I mean, right now it is just a side hustle. It's a side job. But if it ever did get to the point where like I'm just like the fire department's slowing me down, holding me back, then I'll just literally put my 2 weeks in and be a realtor full time, and that'd be my thing. And then I have my investing still that's gonna take care of all my bills.
Yeah, I think it's important. Like I'm sure you guys know a couple folks. Like I went to recruit school with a couple guys that have been medically retired due to injury. And if your only marketable skill to the marketplace is emergency response, well, it's going to be difficult to like do that on your own. Like if you're not employed by some sort of municipal government, county government, whatever it is. And if your side hustle per se is mowing grass or laying block or roofing, unless you're one of the few folks that set it up like a true business and you're not the one doing the swinging of the hammer or the mowing of the lawns, like you're overseeing the book of business, you're getting business, whatever. Like, so what happens if you tear your rotator cuff and now you can no longer, like, you get medically retired? Are you going to be up laying block? Maybe, maybe not. So it's important, I think, to have a skill set, kind of like being a realtor, or something that you can do if you do have some sort of physical handicap at some point, or whatever the proper term would be, having another skill set besides just physical labor. Not that physical labor is a bad thing, but like what happens if,
Right.
So I think it's smart being a realtor, and that definitely transcends into a bunch of other different opportunities, especially if you get that investing background. Like look at Tyler, like you can become a mortgage broker, you can become a realtor, you can do all these other things. And that's kind of like your foot in the door. I mean, let's face it, the barrier to entry to become a realtor is relatively low. But it kind of then transitions you into other things. So
for sure. And it's like any of those things it's kind of like the job, right? You get the minimum qualifications in order to be a fireman, and now it's time to learn your craft. Same thing for agent, same thing for broker, same thing for mortgage broker. It's all those things. Hey, now it's time to get to work and figure out how to use these things. And like Mike said, it's not a physical skill. So if something does happen, you're able to use that as long as you need to, which is huge. And it's going to present a ton of opportunity. I mean, the first responder community trusts each other. And as long as you don't abuse that trust, any one of us, then there's that level of boom. And we speak the same language too, which is huge. And I think just when you said that, I'm thinking, well, now he'll save on any commission when he's buying his own houses, when his own deals. He can source deals, he can list deals, he can help other investors list their deals. All of these things that helps. And I'm curious too. The more and more I sit at home, I always think too. So obviously you have this lifestyle. I used to love working overtime. I worked a lot of it at the start too, like up until pretty much when I had my daughter. And then that slowed down because I was in medic school, and then the market took off. My investing took off to where when I came back to the floor, I didn't really have to work overtime anymore. And my point with all this is guys start to talk, because like anything, I love the fire department for this. Guys are going to start chirping. Oh, Ethan's rich. He doesn't need to work overtime. Look at him over there, that slumlord. He's so well off.
Yeah.
But and I
don't know.
love that, and I that's like one of my favorite parts of the job. Honestly, I love the cramming. It's like
Oh, for sure.
fire at me, I'm gonna fire back at you. It's fun, man. I mean, it's a fun part of the job. But my question is, have guys or girls reached out to you or asked about what you're doing? Because this is what I find in public. When we're all out there especially at the kitchen table, it's like guns blazing, you slumlord, blah, 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 blah. And then privately, whether it's phone, text, or maybe when you guys are just chilling one-on-one, questions start to fly.
Oh yeah.
That was basically how my Instagram and this group came about. That right there.
Yep. So yeah, no, to answer your question, yeah, I've had several firefighters, they're like, hey man, like I see that you're doing this. You talk about it all the time. Some people, like I remember when I first started talking about it, there was a guy that was just like, man, all you do is talk about money. It's not, life isn't about money. Like, I'm just like, dude, I'm not talking about money. I'm talking about investing. I'm talking about, yeah, I know money's not everything. Cause if it was, I wouldn't be at the fire department. We don't make any money. So I, began trying like coaching, talking to people about, what I'm doing. Hopefully that sparks something in them to be like, oh, instead of working all these 24 hours, my 24-hour shift is now a 48-hour shift that I'm away from my family because I took a 24-hour shift. I could now like go figure out how I can not work as much, get a rental, have it work for you. Now you have all this time that you can spend with your family, and you don't have to go to your side job or your second job or work overtime or whatever. So yeah, I've had many firefighters ask me about, hey, let me go look at this house. Do you think it would be a good flip? I'm like, oh, you're into flipping now. That's cool. Let's talk about it. And so yeah, I've had probably, I would say 3 to 5 people. I'm actually listing one guy's house right now for sale. But yeah, there's been several people that have asked about investing in just maybe flipping a house, buying an investment property, building on a lot of land and things like that, that it just come about by me talking about what I'm doing.
Well, make sure you refer them to this group. No,
and I have definitely. I've added several people that I thought I didn't want to add everybody because I don't want it to be stagnant. So I added people that have like side businesses.
Sure.
So there's several people. Hopefully, firefighters that are, that work with me get a hold of you guys that say, hey, I want to be on the podcast. I have a side job that is supplementing my income. We got a guy that does concrete. We got a guy that does wood carving, like kind of like how Aaron does, but he does like chainsaw wood carving and sells them like on the side. Like, I mean, there's all kinds of stuff. So I'm hoping they hear this. I've already tagged them and I've already added them to the group.
We'll peer pressure them into it then.
Yeah, for sure. Yeah. So,
but no, seriously. And it's, that's super cool. And you said like about flipping. So I get this. We were talking about before we hopped on about the guy that sent me an email about, hey, can I chat about real estate with you? And I said, sure. And sends me that link. But, my first 2 questions really are, whenever somebody wants to talk, I'm like, how many sources of income do you have? And then my second question is, what is your goal? Because that's largely going to dictate what I recommend with the strategy. Like if your goal is just to make an extra 20 grand a year, I probably wouldn't recommend rentals, because I always describe rentals as the get rich very, very slowly. I equate them to a dripping faucet. You're not getting a lot of money, but every single day of every single week of every single year, those are dripping dollars into my account. The flipping and the wholesaling is more like a wave of cash, right? But it's one and done. Once it goes back out to the water, it's gone, right? So if your goal is to do long-term wealth building, I'm a big fan of the real estate. The rentals. If your goal is just to make a quick hit so you don't have to work overtime and you're the dude that can swing the hammer and paint and whatnot, cool. Maybe flipping is the way to go. But they're 2 really different strategies, in my opinion, even though that the product is, quote, real estate. 2 different things. So you said, you don't have to work overtime and anything. And it's probably not because the real estate is just jamming hundos in your pocket, but we already established the fact what it's doing is reducing your biggest expense, or most people's biggest expense. So one of the things I wish I would have focused on early on in my investing career, besides just I wish I would have scaled faster, but is also don't always worry about making more, worry about how you save more. Because I think that, at least for me, it was like, okay, how do you make more? And it's like, well, if I would have focused on how I could save more in taxes and stuff like that, maybe I wouldn't have had to do all of the activity that I was doing, because I just would have kept more of what I was making. So that's just something I want to point out. Just because you go buy a rental does not mean you're flying all over God's green earth in a private jet. Let's
Yeah,
just be
no,
clear
it's
there.
not a,
You know,
it's not a get rich quick, just like you said. It's not that at all. I have figured out a way to use my real estate to get rid of, my biggest expense. And then I see my other expenses. I don't have a car payment, but if I did, say my car payment was $300 a month, I would try to figure out a way using real estate for somebody else to pay for that bill.
hey, your realtor business.
Exactly. So it could be your side hustle. It could be, okay, you're going to do one driveway of concrete for the week. That's going to pay for your car payment. Sure, that's fine. If you want to do that, then that's a good way to do it. But I always look at how can real estate help me not work more? I don't have to work more. I've worked hard my whole life. I would say, I would be one of the hardest workers in the room, but I'm to the point now where I've changed my mindset to I don't want to have to work. I don't want to work. Like, I don't want to do what everyone else does. I don't want to work till I'm 60 and die. I don't want to work till retirement. And if I don't have to, I don't want to work like my mom, my dad, my wife's parents. They're going to work until they die because they've never had this, literacy or financial literacy taught to them, or nor do they even care. They're just like living paycheck to paycheck, and they're about to be, you know, at the retirement age, and they're still going to be working. So I don't want to do that. That's kind of what people would normally say, that, that's what we're supposed to do. Work till we're 60 and get on Social Security. Like, that's not me. I want to be able to retire early as fast as possible. And if I can retire, great. If I can't, I'll just, keep doing what I'm doing and keep doing my investing.
Nice. And that's huge. I mean, it's just like it's a mindset shift, right? It's like once you turn that switch on, it's like hard to go back. And I think most of our parents, same thing. That's how things used to go. And I think with the availability of information, people are understanding there's different ways to live. And I mean, fire department, great job, fun job, but now you're able to do things to where you only have to do it on your own terms. And I think it'll continue to improve. So we're coming up on an hour. You've shared a ton of information with us. Do you have anything else that you want to go over? Anything else that Mike or I can help you with?
I mean, basically, I'm just glad to be able to tell my story and about house hacking. I'm always looking to, learn more strategies, listen in, sit in, whatever. Back at home, here at home, like I run my own meetup. Me and another guy that we found on Bigger Pockets. Like, we do every third Thursday.
Oh, by the way, you didn't mention that before.
I forgot about that. Yeah. So tonight, 6:00, we're having a meetup that me and another guy, and then one other guy. I guess it's three of us that we kind of host it, and we're doing that, just trying to get people to get into investing. We're not in it for money. It don't cost anything. It's show up, learn, let's work together. And somebody might be a private lender, somebody might be looking to invest, somebody might own a construction company, and we're all just networking, talking about how to get it done. So.
Yeah, my meetup. Thank you. My meetups tonight also. Is yours just for first responders or just in general?
No, it's just in general. It's just called Western Kentucky Real Estate Investment Meetup. We just kind of named it. So there's some people that come from 30, 45 minutes away that even come. Last week we had a whole room full. Sometimes we only have 4 people, the 4 people that come every day.
I hear you. I've always focused on my group is probably about 4 years old, 5 years old now. And sometimes we have 20 people, sometimes we have 50. And I've never focused on trying to have 200 people pack the room. I've always thought hey, there might only be 4 people, but really, as long as they're there and they're good quality folks, who cares? You can have a lot of great conversation and a lot of great connection with 4 people. So yeah, make sure you include that. Sorry, my youngest is very intrigued here by what's going on with these lights and microphones and headphones. And he sees my helmets and he goes, "We use," like, I don't know, apparently that's helmet. But so make sure you give us the link to that. We'll throw it in the show notes. So.
Okay. Yeah. Sounds good.
So is there, Ethan, like Tyler said, we're wrapping up. What advice would you go back and give your younger self?
My younger self, I would definitely give is just learn more about financial literacy. Sooner the better. I started in 2019 and I was reading listening to podcasts, reading books. Me and my wife have her cousins or whatever kind of were into, the FIRE movement and stuff. So we kind of listened to them. They were kind of like our mentors, and that got us kind of started. Then we got into bigger pockets. Then we started, I started watching forums, adding to forums, asking questions. People would answer those. So I would just say, listen to podcasts, read books. Because I'm not a reader. It takes me like a whole year to read one book. But whenever I started reading financial independence books and financial literacy, like I couldn't get out of them. So like I would, and then now, like when I go to the gym or something, or when I run, like I'm not listening to music anymore. I just listen to First Responder Financial Freedom podcast or
That's what's up.
Choose FI or any of these other, Coach Carson's another one that I listen to. Yeah. All these financial, that's all I listen to. And yeah, there's probably episodes that I pretty much know what's going to happen or whatever, but like, it's just hearing these stories and gaining more knowledge. And, it's basically just like repping out. Just like when you do a bench press, you're repping out. I'm just repping out when I listen to these podcasts. And then whenever somebody asks me questions, I'm not like, what do I say here? I already know the answer because I'm just going over and over and over, listening to all these podcasts, reading these books on other people's stories and how I can incorporate their story into mine, and maybe their way of doing things is going to help me on my next deal or something like that. So I always just encourage people and I wish I would have done it a lot sooner. So.
Nice. Yeah. It's crazy with YouTube and podcasts. I mean, anything that you really want to learn how to do, you can accelerate your growth. And like you said, 2019, you started, 2019, you bought a house. So, I mean, it shows if you're willing to learn and you're willing to take action, I mean, it doesn't need to be that long of a process. So, I don't have anything else. Mike, do you have anything else?
No, man, I just want to thank you for being active in the community and coming on the show. Like, hopefully inspire somebody else to hop on. And yeah, house hacking is like just one of those things that, if you could go back and give your younger self that advice, like just think about how far ahead you would have been if you would have done this when you were 22, just crazy. So, but, you can't go back in time, but you can start tomorrow. So employing these types of things in your everyday life, while it might be a little inconvenient for a year or two, just look at how much further ahead it's projected you in 3 short years, right? So that's all I got. So Ethan, is there anything you wanted to kind of leave everybody with, or?
No, man, that's it pretty much. So if you have any questions or anybody listening, want to know more about, I can go in depth. I don't care about, what did he buy the house for? What are your numbers? I'll give you all that. I'll print it out. I don't care. Like I'm an open book in that aspect. I can break it down. So if anybody wants to do that, that's fine.
Maybe just throw some of that in the group, actually, as like a little bit of almost like a case study, if you will. Yeah. Because I think, we didn't dive too deep into the numbers, deep enough. But like, if you want to break down, here's before picture, here's after picture, here's what I bought it for in rents. Like, I think that would be super valuable.
Yeah. So. And if somebody wants to get on my Instagram, I think it's saved on like maybe the stories or whatever that. I think each project that I've done, I kind of put on the before and after too. So nice. Kind of see it there.
All right, man. Well, don't have anything else. This will wrap it up for episode number 52. And it finally checks the box that we've got 1 year under our belt of being the most probably organized group of firefighter real estate podcasting people,
we are the number 1 podcast named First Responder Financial Freedom. So, we are ranked number 1, Mike.
World domination.
I'm glad I'm the 52nd episode marking a year. That's cool.
That man. Cool. We greatly appreciate it. And like we always say, or have been saying recently, hop on, man. Even if you don't think you quote, have any value to provide, I guarantee you do. And it could be, I own my own business, mowing grass, laying block, doing roofs, power washing. We do want to expand outside just the real estate community. Obviously, we're all heavily focused on real estate, but there's a ton of other stuff out there that we would love to discuss. So if you know anybody, please peer pressure them onto filling out the JOT form and getting on the schedule so that we can kind of share with everybody what they got going on. So that's all I have. Thanks for joining us on episode number 52 of First Responder Financial Freedom.
All right, man. See ya.
Thanks again for spending some time with us today. If you found value in anything you heard, please share with someone who may benefit. We look forward to connecting between shows in our Facebook group, First Responder Financial Freedom. Till next time.